Today we're going to do some trading live on Bybit platform. And a lot of you said, okay Bernie, put your money where your mouth is and let me see how you trade. And today I will show you how I trade with my own demo money. Hello everyone and welcome to a new episode of BVibe. Today, as we are talking at the intro of this episode, we are going to talk about how to trade futures. So how to make an order and how to trade on a centralized exchange for, let's say, for crypto. First of all, this futures trading is done on a central exchange, on a crypto exchange. There can be central exchanges and decentralized exchanges. Those are a little bit different, but you have to know for most of the centralized exchanges, you will have to undergo a certain procedure. I was talking about it before. That is called the KYC, the Know Your Customer, where you will have to register yourself, give some kind of a personal data, give some kind of a personal document, identify yourself in order to gain access to the platform itself to be able to do the trading. Last time I showed you how you can buy crypto on your wallet, how to send crypto from your wallet to the exchange and vice versa, and such things, how to convert from one crypto to another. And also we have shown how you can create a spot trade, so how you can create a spot order. That means that you will create and buy an asset, an underlying asset with that specific order. That's spot trading. So when you're doing spot trading on Bitcoin, then you're actually buying the underlying asset. So you are buying Bitcoin. When you are buying futures, what exactly are you doing? You are buying contracts. So you're not buying the actual asset, you are buying contracts for a certain price in a future. So if you're longing or shorting, so you can have two different types of order, longs and shorts. So if you are, let's say, betting that the price will go up in the future, you will create a long order for that kind of asset, for, let's say, Bitcoin or Ethereum or something like that. And if you're guessing or thinking that the value of this asset like Bitcoin or Ethereum will go down in the future for any kind of reason, doesn't matter, then you will create a short order. So basically you are betting or guessing what kind of price will be of this asset in the futures, and you are buying and selling basically contracts, so future value of this asset. Before we go into the exchanges themselves, I also show you how you can register of one of the exchanges, central exchanges, that's Bybit. I'm using Bybit, and I have to tell you one thing, and most people are doing this, let's say, mistake. You have to own your own crypto. The exchanges are businesses. They are not your friends. You have to know this. They are, let's say, giving the possibility of different kinds of services. So they are providing different kinds of services, and you are only the user of those services. So you can buy crypto there, you can exchange crypto, you can do some kind of staking. So you can deposit your crypto and earn some yield on top of your deposits. You can trade futures, you can trade spot, you can do copy trading, and so on. So there are different kinds of services on those platforms that you can use. And if you're not using those services actively, so you don't have any business of being there at all. So let's say if you're only buying crypto, then you go to the exchange, you buy crypto, and you move crypto to your wallet. Because then you are in custody, you are owning your own crypto, and then you are not reliable on this actual exchange, whether or not it will go broke or whether or not you will be able to retrieve those deposits or those crypto coins from that exchange or not. So don't be stupid. Exchanges are businesses. They care about you. They're regulated and so on and so forth. But also banks are regulated and you can lose your money with banks. So be careful. If you want to use exchanges, go to the exchange, do some kind of service with them, and then retrieve or withdraw your money to your own wallet. In that case, if something goes, I don't know, in a wrong direction, if this exchange will go bust or something like that, you will not lose your money. And be careful. But if you are a trader, if you want to trade, if you want to do some kind of future trading, spot trading, earning yields and so on, then you have to be on the exchanges actively, but then you are paying very close attention what is going on every day on those platforms. And you have to read about those platforms, you have to see what is the liquidity, so how much money this platform has, and so on, so whether or not you will be able to retrieve your money and withdraw it. So you have to pay very good attention. The best way is to have a separate wallet. I have shown you that last time. That was a Tangent wallet. It's a cold self-custody wallet that you can use to store your own crypto. And that's the way to do it. So you have all of your crypto on your wallet. If you want to do something with that crypto, if you want to sell it, if you want to stake it, if you want to do anything with it, then you move it. So you send it from address in your wallet to the address of the exchange. You then swap it, convert it, transfer it, trade it, I don't know what. And then when you're done, then get back your crypto into your wallet. So move it from the exchange. Why would you keep your own money in some company that's somewhere? Why? It doesn't make any sense. So be very careful. So guys, let's start. So trading futures, as I said at the beginning, is basically trading the future value of this asset. Those are contracts, and you're putting long and short orders based on your beliefs, based on what you have read and what you think that the price will be of that asset in the future. And also we are talking about two different kinds of analysis that you can have. One is a technical analysis, so you're looking at the graph, the value, the price, you're putting some kind of support in the band, lines and zones, and drawing some kind of trends and support lines, and looking at the previous statistics of how the price was changing during the history. And that's one thing, that's the technical analysis. And another type of analysis is the fundamental analysis. Basically, you're looking at the broader economic picture. So you're listening to the markets, watching the news, watching what's going on, this macroeconomics. And then, because of some kind of elections, of some kind of downfall, or there's some kind of war breakout, something like that, it will actually impact, and be sure that it will impact the price. You have seen and witnessed how this Trump meme coin, one of the meme coins in crypto industry, can, because of the hype, there's nothing behind this meme coin, so there is no intrinsic value of this coin, but because of the hype itself, it went up because people were buying into it like lunatic and pushing the price up. But if you don't have the right value, you cannot do anything then the price will actually go down, because people will that's the standard pump and dump scheme. So you do the hype in the social medias and so on, then you pull a lot of people inside, you pump, they buy, the price go up, and the guys who knows that this is a pump and dump scheme, when the price goes enough to the upside, they sell. And they are, let's say, they earned a few $1 million, and that's it. and the guys who are not crypto traders, they do not understand this, they will be kicked off like hamsters. So be careful. Let's go to the exchange and see what's going on. So guys, now you can see the Bybit exchange, and you can see here that I have already started a demo trading because we are going to use demo money. And how you can do this, once again, if you're going to my YouTube page, you have links here. So you can use this Bybit link and become a member. If you register with my affiliate link, then you can claim up to $6,000 of initial deposit bonuses. So you can use this. And once you have registered yourself, you will be here. You can open this view let's go to the front page of the Bybit. So this is the first landing page of the Bybit exchange. So you have the tools. So you have trade, futures, Bitcoin, USDT. So now we are in an actual futures trading tool, and here we can use actual money to trade. But so if you haven't traded before, my suggestion to you will be to use demo trading. So Bybit is one of the exchanges that provides this possibility to use fake demo money. And you can go here in tools, and you here have this option of demo trading. You press this. Here on the bottom right corner, you have the possibility to request demo funds if you don't have any kind of funds. I have around $50,386. So this is a demo. It is a fake, let's say, money. So it's a play money. So you can use it to see how this exchange works, to try setting up some orders and try to play around without any risk that you will lose any of your own actual money. So let's see what we have here. So at the top, we have the pair that we want to trade. So if you want to trade Bitcoin, then it has to say BTC USDT. If you want to, let's say, trade Ethereum, then you can search for Ethereum and swap and switch to the Ethereum graph. So there are different kinds of pair that you can trade. Let's say for this example and for this demo, we are going to trade Bitcoin USDT. Okay. What else you can see here? You can see here the graph and the actual price. So the actual current price is this $105,026. You have some kind of generic information, statistics about the change of the Bitcoin in the last 24 hours. What was the high price? What was the low price in this 24-hour time frame, and so on. You can have some kind of information here, trading data that you want to see. So what is the active trading volume and so on. But on the chart, you have the possibility to switch for different time frames. I have shown you this before. So if you want to see on a resolution of 1 minute, of resolution of 5, 15, 30, 1 hour, 4 hours, and so on, it depends on your style. If you're, let's say, a day trader, then you will look at those smaller time frames, let's say on the 15 minutes or 30 minutes. If you are a swing trader, you are trading, let's say, for several days or weeks, then you will probably look at the 4 hours, 1 day chart. And then if you are someone who buys and holds and waits for some kind of a big pump to the upside or to the downside, then probably you will do some kind of trading in weeks, days, or weeks. Then you will go to these time frames that are basically days or week-based time frames. For now, because we are going to trade let's say like a day trader, we're going to focus ourselves on a 15 or 30 minutes trade, and we'll try to find out some kind of, if there is a possibility to do some kind of trading here. So be sure that you are here on the demo trading so that you not lose your own money. Here on the right side, you have the order book. I have shown you on the previous episode what this order book is. So this is amount of the Bitcoins that are ready to be sold or bought at a specific price. So you can see here that there is, I don't know, 17 or 16 Bitcoins to be bought at $105,040. There is 13,000 or five Bitcoins that someone wants to buy at $105,050, and so on. Currently, as you can see here, there is more liquidity to the upside. So here is totally 103 Bitcoins to be sold and 90 Bitcoins to be bought. So there are more people at this instant, these seconds, that if the price will go up, they will want to sell their Bitcoins. But it's a tug of war thing. So it doesn't mean that it will not change. So you can see it changes every second, this picture of how many people are in this order book and how many people are willing to sell or buy Bitcoin. And then to the far right, you have the controls of how to enter your trade, how to start your trade. You have some kind of tools here to do some kind of information, and then you have this trading tool. You can choose between isolated and cross margin. I will not go now into details, but for you, I suggest to use isolated margin. Why? Because you will be then in a position, the worst case scenario is that you will lose the amount of money that you have invested. So let's say that if you have $50,000 in your account, in your balance, and then for this specific trade, you will enter the trade with $1,000. Then if you are in isolated margin, the worst thing that can happen to you is to lose this $1,000. The other $49,000 will not be affected at all. If you're using the cross margin, then that is something for more professional traders. Then if you start to lose more money than $1,000, then practically you will give the opportunity to the platform, the ability and the rights to the platform to go into your leftover of the margin. So it will start to grab the other $49,000. Not all, of course, at once, but it will go there. But why is this important? Because the isolated margin, when you exit the trade, you exited the trade. And you don't have the full control if the markets go against you more than you have anticipated. So you said the price will be between this high price and this low price. If for any kind of reason the markets will go above that or below that, your trades, if you're in isolated mode, will be automatically stopped and you will be kicked out, or you will go out from your trade with a profit automatically. And if you're using the cross margin, then you'll give, let's say, some kind of a buffer for the platform to not exit your trade, to not stop your trade, even if the price go above or below some specific price. And it's good because for some professional traders, because then you are putting into your calculation the volatility of the markets, because you cannot predict always how much Bitcoins will jump up and down. And sometimes it jumps for a glimpse of seconds up or down. And then if you're isolated, you'll be kicked out. And if you're in cross margin, then you will not be kicked out and your trade will continue to go on. Okay. So what we have here is also the leverage. So this is very, very important. How much leverage, or how much do you want to borrow the money? So if you're putting 1, then you are not using leverage. So how much money you enter the trade. So if you're putting here order by value 100, that means here is the cost, $150.55, 0.055, because there is some kind of a fee you have to pay. But you are basically entering your trade with $100. And that's it. And you're not using any kind of leverage. That means you will be liquidated. So you will lose all of your $100 only if the price of Bitcoin goes to 0. That's it. If you're using leverage, and if you're practically, if basically you are trading futures, you will be using leverage, and I suggest that you use 0.2, 0.3 to max 0.5 times 5 leverage, not above. And if you're using leverage, then if you are setting the value of the order 100, that means with 5x leverage, that means that you will have to give your own money $20 times 5, it's 100, and you will enter the trade with 100. So basically you will enter the trade with $100, of which $20 is yours and $80 is borrowed money. But then if you're doing this, then the liquidation price is not 0. Then the liquidation price tends to move closer to the actual current price, and I will show you that. Let's say that we go times 1, so we're not using leverage, and we will enter the trade of $200. So it will cost me $200, and I will say buy long or sell short. It depends on what I think the price will go, where the price will go in the near future. So I can draw here some kind of a trend, some kind of a line like this. Maybe, so this is some kind of a support. You see that the price is bouncing off this blue line, and it takes some time to learn how to draw. It's not an exact science, but it's practice, more or less. So let's say it's like that. So you can see that the price actually is somehow bouncing in this funnel, and the price, if it breaks up to the upside above this blue line, then most probably it will continue to go up. But if it breaks this support line to the downside, then it is more probable that it will continue to go, the price will continue to go down. Currently it is still within this funnel, if you're looking this 15 minutes chart, but currently the price is going down because the trend is in this second that it will go down. And I say, okay, I will go and sell short because I want to see this price go here and retest this support line. And I will press sell short. I will confirm, and basically here on the bottom you can see here that I have entered the trade, and I have entered the trade with a market order. So you have here the possibility to select a limit, market, or conditional order. As I said before, market orders, so this is the market takers, you're entering the trade, the markets, immediately at the current price. If you're using the limit order, then you are waiting for the price to reach to a certain level to enter the trade, and conditional is some, let's say, mix between limit and markets, when you are actually activating the orders once it reaches a specific price, then you start a limit order to enter the trade on a certain level. And it's used, it doesn't matter for now, but let's say it is used to trade the breakout. So if I want to trade the breakout from this funnel, I will use conditional order, because I will set parameters or configuration like this. If the price goes, let's say, to 104,270, then I will trigger and start the order to enter the short trade if it reaches, I don't know, 104,000. And it's like that. But let's stick to the market and limit orders. Now I have entered the market order. You can see here on the bottom, those are the active current positions. You can see here what is the margin type, what is the leverage of a current trade, how much Bitcoins we are trading. So this is the value of the trade. So the total value includes the margin and the borrowed money from the leverage. So it's the total value of the trade. Here we have the liquidation price. The liquidation price is 209,000. So you can see here, if I zoom out, it's basically it's the double amount of the current value. So current value of the Bitcoin is 104,000. So double that is 210,000. So that's why it's 210,000. That's why it's the liquidation price, because there is the same space between 104 to 210,000 as is from 104,000 to 0. That's why you have this. Because we entered the short trade, we are betting that this price will go down. And on the graph, you can see here this red line, it symbolizes the entry level of your trade. And this dotted line presents the current level of the price. Okay, also here on the bottom, you can see here the realized and unrealized profits. You can see that I am currently 6 cents, euro cents in profit, but also I have 5 cents of realized loss, because you saw here that I had to pay some kind of a fee. If you're entering a fee, you'll have to pay a fee to the platform itself, and this fee will be automatically and immediately, let's say, included as a realized profit, and it's here, so you cannot move this out. Also, if you want to enter the take profit and stop loss, you can enter it here. And you can see here that you have a possibility to close this order by a limit or a market order. If you want to close it immediately, your order with this profit, unrealized profit, you will select close by market order. And let's say if you want to close your entire position, 100 position, or only some percentage of your position, or you want to close it at when the price go to the specific level. So let's say if the price go to 104,363, then I will exit. So I can set 363. It's the level, is the price when I want to go out and I want to sell. I want to close all of my positions and press confirm. Now you can see here this green line appeared. What means? It means that when the current price of the Bitcoin reaches this green dotted line, the order will be automatically closed. So that's why you don't have to pay attention all the time to the markets, looking at the graphs all the time. Now it's in automatic mode. You can close your computer, and if the price of Bitcoin will continue go down because you think and you have done your research that it will go down, it has a very big probability that it will continue to go down, then this limit order will automatically close your trade with certain profit. But if you want to close it right away with this profit 0.08, you will close it immediately, the whole position, confirm, and that's it. So you have exit your trade. The same thing is if you're doing the long trade, you can put the value, you can buy long, confirm, and then you are trading long with no leverage. And you can go out with a limit order or a market order. I'll say close the order with the market order, confirm, and I automatically get out. Now, if you want to make things a little bit spicy, then you will enter the trade with more leverage. Let's say 5 times the leverage, using the same value, 200 bucks. But in this occasion, if you are using only 200 bucks, then I will have to give only 40 bucks of my own, and the rest will be borrowed from the platform. You can see here that also the fee is bigger because you're using leverage. Not only that you are entering the trade, you are entering the trade with a leverage, with borrowed money. So that's why you have to pay a bigger fee. So let's say buy along with this leverage. Now I have entered this trade, and you can see on the bottom what is the quantity, what is the value of the trade. So the value of the trade is, I don't know what it says, 100. I said 200. Okay, I will close positions. I will enter once more value, let's say 500. Okay, so now it's good. So the value of this order is around 400. You can see the entry price, you can see the liquidation price, and now the liquidation price is not 0. The liquidation price is much closer. So you can see the liquidation price is here. It's not 0 because you are using leverage. And the platform works in that kind of way that if you start to lose money, so if I have entered the trade with 500 bucks, 100 bucks is something that I have put inside, and the platform gives you the opportunity to lose only the amount of money that you have give. So you cannot lose 500 bucks. You can only lose maximum 100 bucks. And that's why the liquidation price is not 0. If it would be 0, then you will lose all of 500 bucks, but 400 bucks is not yours, and the platform will not give you the opportunity to lose the platform's money. That's why the liquidation price is higher. So this gap between the current price and the liquidation price, it's basically the gap where you can play with the price until you lose your money that you have put within this specific order. And basically you can see here the same thing. You can see the unrealized and realized profits. And then let's say we can put the take profit and stop loss. If you press add, you can say where to position an order, automatic order, to exit your current trade with a profit or with a loss. Let's say I say if I gain 50% of my order value, then get out with a profit. If I lose more than, let's say, 15%, then also automatically cancel my order. You can cancel it, so you can exit your order with the entire position, so with all of the value or only the part of your value. So you can go and exit your trade 50% of your value, not the whole position. So I say confirm, and now you will see here I'll just refresh it. So here is the stop loss, and here is the take profit. And if you remember, I was talking about that you always should have the take profit and stop loss set as 2-to-1 or 3-to-1. So the gap between the current price and take profit and the current price and stop loss, it should be at least 2-to-1 or 3-to-1. Okay, so you are risking less in this occasion. So you're betting that the price will go up, and that's why you have a higher gap to the upside, because you believe that the price will go up and reach this level. But if the markets turn against you, go in a opposite direction, then you have this, let's say, safety net. If it goes to this price of $101,680, then your order will be automatically closed and stopped with a 15% loss. If you want to change it, of course, you can go here and change whatever you want. You can increase the percentage for take profit, for stop loss. It means only that this gap will be even wider. You cannot put the stop loss below the liquidation price. Doesn't make any kind of sense, but because the liquidation will automatically close your trade. It will never reach the stop loss if you put it below the liquidation price. So that's why. So what we can do now, trailing stop, it doesn't matter for now what it is. We can reverse position. So if you see that the market switched, it started to go in a different direction, you can press reverse and you will automatically close the long position and enter the short position with the same value. So you see that the markets are quickly switching from one direction to one sentiment to another, from big demand to big supply, or vice versa. Then you have the possibility through one click to switch from a long trade to a short trade without doing 5 different things. So you have to first to close the order, then to make a new order with the same value, going into opposite direction, and so on and so forth. That's why it's, let's say, very nicer and simpler to use very intuitively one specific function to reverse the whole entire position. So I can now also switch from a short to a long, and that's it. So these are the possibilities that you can take on this platform for trading futures, long and short. Also, what I want to say, because we have now entered the trade, and we can see here that the liquidation price is around $84,500. And then if your price started to go lower, and you are in a bigger risk to hit this liquidation price, and you will be kicked out and you will lose all of your money for this specific trade. That's why it's very important not to put all of your money in a single trade. That's why I didn't put $50,000 in one trade. That's simply degenerate. Don't do that. Put around 1 to 2% of your margin in one specific order, not more than that. That's the proper mindset. And also, if you lose consecutively three trades in a row, then simply don't trade for this day. Just simply close your computer, go outside, clear your head, and start trading tomorrow, because you will go into this revenge trading and then you will lose even more money. Okay, but let's say that the price will start to go down and you are in a big risk that it will hit this liquidation price. What you will do now if you want to lower the liquidation price? Well, what you can do first is see if you're having some kind of a leverage, because you're using 5 times the leverage, 5x. The things that you can do is open another trade or simply go here and lower the leverage. So you can lower the leverage to, let's say, to 3, confirm. It will switch from 5x to 3x, and now you can see that the liquidation price is not 84,000 anymore. It's 70,000. And then if the price continues to go down, you have more space now to the downside to regulate if the price, and to be kicked out of your trade if the price continues to go down. Once you see that the price recovers and start to go up again, then you can increase your leverage. You can go up here and increase the leverage once more, and then the liquidation price level will also be returned to the previous positions. Also, you can see and add here take profit and stop loss like we did it before. So I'm saying when I will be 50% in a profit or 25% in a loss, automatically close all of my trades. What we can do also, we can, if you don't want to enter it manually, you can just drag and drop these stop loss levels where you want. So it's very easy and very intuitive how to use this, let's say, borders. So this is the take profit. If the price goes to here, then you will be exiting with a profit. If the price goes to here, you will be exiting your trade with a loss. And pretty much that is it. So guys, you see how you can use this platform. You have seen how I created a long and a short trade. You have seen how I can set up the take profit and stop loss. Also, what I can show you is how to create a limit order. It's very simple. I will close this current order. I'll go here. I will select limit order. Let's say if we are having this current graph, if I want to enter the order, long order, let's say at 104,587, I will enter here 104,000, let's say 617, $10,000, of which I'm going to use my own 2,000 and borrow 8,000 from the platform and say, okay, I will buy long. Confirm. Then you will see here that I have here a new dotted line, set limit. That means that I'm currently not in a trade. The trade is not active. It will become active once the price reaches this level. So if the price will go lower, lower, lower to this, and it will touch this level, I will be automatically entering an order with a trade with a long for $10,000 on Bitcoin. That's why, because you are now seeing this kind of a graph and you don't want to wait and sit at the computer and wait when the price will go down to this level because you want to buy it at this specific level, then you'll enter the limit order and it will automatically be fulfilled once the price reaches this level. And the limit orders are also good, as I said before, because you are then a market maker. You will not pay those kinds of lunatic fees that you are going to, not so lunatic, but higher fees that you are going to pay as a market taker by using the market orders. But at some occasions, sometimes you will have to use market order because you want to enter the trade at this very instance, at this moment. So basically that's it. Guys, you have Bybit account. I show you how to register, and the only way for you to see by yourself is to try to test it and to play around. You have this demo trading. There is zero risk with this, so you can learn, you can see by yourself, and you can practically make different kinds of statistics. How are you doing with different kinds of parameters? And then figure out what is your particular trading style. Are you more a day trader or a swing trader? Are you basically trading from this supply and demand zones? Are you using different kinds of configurations? Are we using different kinds of, let's say, tools, let's say volume or RSI or something like that? So you're using different kinds of indicators that will help you to lower the risk whether or not the price will go up or down. So just to increase your odds while you are trading. That's it, guys. Now you know how to trade. You can try it by yourself. And enough for this trading for now. Maybe we will go back to the trading using the centralized exchanges once these decentralized exchanges will be up and running. And also at the end, I want to show you that you have different kinds of links here on my personal page. You can go to the AVADEX. So this is the decentralized exchange platform that you can use. It's not currently active. It's in a development phase. So you can be an early adopter and see whether or not you like these kinds of exchanges. And basically those are the same type of exchanges like a centralized exchange. So it has the same look and feel, but you will not have to undergo the KYC. So you will not have to give your personal information about who you are. So maybe you like more these kinds of exchange. But as I said before, this is a test phase for this exchange. So if you want to be early adopter and learn some kind of, and learn more about it and earn different kinds of bonuses and perks, then you can join AVADEX using my link. Also, you have the links to buy the Tengan wallet for storing your own crypto. Also, you have this, as I said before, a link to go to the Bybit and register yourself. And also, I have these links to the stake investment app and eToro applications if you want to do more traditional like investments for real estate. This is the stake application, and for the standard market, so the stocks, bonds, ETFs, then you can use the eToro application. That is it, guys, for today. I know I'm very, very boring. That is how it is. Trading is not for everybody. It's not super sexy. You can earn a lot of money, but trading is a very, very good, let's say, job, because you do not have to rely on anyone else except you. So you have this full independence. When you want to work, how much money will you enter, how much information you will gather, how much you will learn, and so on. The crypto industry is also very good because the crypto industry and markets are open 24/7 every day, opposed to these traditional markets like S&P 500 and so on, the New York Stock Exchange and so on. It's not, it has a working hours, and crypto doesn't have it. So if you want to go and try yourself in this kind of a business, it's very hard, it's very tough, and you have to devote your full attention to this. It's not impossible, but you have to train, you have to learn, and you have to see whether or not this is for you or it isn't. But at the end of the day, you can earn a lot of money, and it's all about you. You don't need anyone. You only need a computer and your time. That's it, guys. For the next time, I believe that we will jump more into the blockchain so that you understand what is Bitcoin and what is blockchain and what it's all about and what is the technology underneath. Bye bye, guys.